Speculation as to which way the Dalal Street would turn after Raghuram Rajan announced on Saturday that he would not pursue a second term as an RBI governor. The benchmark indices started cautiously, yes, and dipped into initial trade. However, strong global cues led by polls suggesting that Britain was unlikely to exit the European Union pepped the markets up, and this led to a handsome recovery on the Dalal Street. The Sensex gained 420 points from its lows to close approximately 1% higher, while the Nifty too ended well above the 8200 mark. Anuj Singhal joins in now to explain the day on the Dalal Street in detail. Anuj, fair to say positive global cues to the rescue.
Well, positive global cues, but to be honest, the market played as per script. Even if that was not the case, the market would have rallied because this market is in the penchant for buying bad news is clearly there. And the market absolutely played as per script. It had a gap down because of that whole Rajan exit, but that gap down was used to buy, and the market actually closed at high point of the day. Of course, positive global cues helped. The IT stocks did remarkably well as the rupee weakened. But if you look at the individual stocks, it was led by Infosys up 2.5%, TCS was up 2%, and HCL Tech as well up about 2%. Other Nifty gainers today included stocks like Tata Motors, Tata Steel, and Bharti Airtel. All of them were up between 2 to 4%. Cement stocks rallied in trade today, some of them at 52-week highs. Ambuja, Ultratech, and ACC were all higher. Some other heavies today included stocks like Larsen, Reliance, and ONGC. So all these stocks also gained ground. Then, of course, the FDI push propelled some of the stocks like Jet Airways, Reliance Defense, and BEML did well. And some of the mid-cap gainers included stocks like Max, Indian Bank, and Unitech. Of course, just final thoughts. If the market had gone down in line with, say, if the negative global cues were there, it would have been blamed on Rajan, right? So at the end of the day, you got to give it to market that despite negative news, the market just carried on. And really, now the next big trigger would be Brexit, or Remain as it's being called now, because clearly that camp seems to be gaining ground again. And that was the reason you saw global markets rallying today. And the sense you get is that if that happens, that could be the next catalyst for the market, apart from monsoon. But for today, the market dealt with bad news absolutely fine.
All right, Anuj, thanks for joining in with that. And as Anuj